Okay, you guys are now going to look at exercise 4-6, and that's on page 209. Here we're dealing with discontinued operations. So before we start this one, it's probably a good idea to look back at the income statement on page 173. It's a multiple step income statement, and it kind of highlights the different sections. It starts out with income from continuing operations. Well, income from continuing operations would include, of course, your regular revenues earned from operating the business and any operating expenses. The difference there we would call operating income, if you're looking on page 173. Then remember we had those other income, other expense items that we'll add or deduct. Here they list interest income, interest expense, and a gain on sale of investments. And that gets us to income from continuing operations before income taxes. Then we deduct our income taxes and get income from continuing operations. Now this next item, any gain or loss from discontinuing a portion of the business, should not be included as part of income from continuing operations because it's a segment that's being discontinued. So we'd show any gain or loss from discontinuing a portion of the business, net of income taxes, below income from continuing operations, but it would be counted as a part of net income. Then remember in the last video we looked at comprehensive income. Well, net income would be your starting point in calculating comprehensive income. You'd add net of income taxes, those unrealized holding gains or losses, foreign currency translations, and a couple other items that we'll get into later. And then your earnings per share calculations would be shown at the bottom. So here we're going to look at, this problem starts with income from continuing operations and shows how we would handle some discontinued operations. So our starting point here in this exercise, we got Chance Company. This is a partial income statement for the year ended December 31, 2016. And we're going to start with income from continuing operations, which is, as you just saw, quite a ways on down on the balance sheet. Now let's read through this one. Chance Company has two operating divisions, one manufacturing farm equipment and the other office supplies. Both divisions are considered separate components as defined by generally accepted accounting principles. The farm equipment component had been unprofitable, and on September 1st, 2016, the company adopted a plan to sell the assets of the division. They're disposing of it. The actual sale was completed later that year on December 15th, 2016 at a price of $600,000. So they sold off this segment this segment's assets for $600,000. The book value of the division's assets were $1 million, which resulted in a before-tax loss of $400,000 on the sale. And we're going to show that loss on discontinued operations net of income taxes. But we also want to include any loss that that division had prior to being discontinued during that same year. So in the second paragraph it says the division incurred a before-tax operating loss from operations of $130,000 from the beginning of the year through that sale date on December 15th. So the total loss for the year would be the loss on the sale, $400,000, plus the loss from operating that segment through the sale date, $130,000. So our total loss for the year on this division that we're discontinuing is $530,000 before taxes. The income tax rate is 40%. And then they go on to say income from continuing operations is $350,000, which we have here. So what we're going to do is after income from continuing operations, we're going to list discontinued operations, loss from operations of a discontinued component, including loss on disposal of $400,000. That's a negative $530,000. We got that by adding the loss on disposal of $400,000 plus the loss from operating this division we're going to discontinue through the sale date. That was $130,000 plus $400,000 gets us our $530,000 loss. All right, now a loss would be a tax benefit for us, you guys. Anytime we can deduct a loss from taxable income, it benefits us on our income taxes. So we're going to say we're going to have some tax benefit here on this $530,000 loss. Our tax rate was, what, 40%, so we'll say 530,000 times 0.4 or 40%, and that gets us a tax benefit of $212,000, which offsets part of the loss. Our income tax benefit was $212,000. Okay, so when we net these two together, we get a loss on discontinued operations of $318,000. That should make sense. If we have a loss, right, we get some tax benefit for that. Okay, so what we're going to do is take our income from continuing operations of $350,000, deduct the loss on discontinued operations to come to net income of only $32,000. So these discontinued operations, it is included in net income, but it's not a part of income from continuing operations. Okay, now they want us to show the earnings per share calculations, and they're going to want a breakdown there. How much of the earnings per share is attributable to our income from continuing operations? What's our negative earnings per share on the loss on discontinued operations, and then what's earnings per share in total on the $32,000. So what we'll do, we'll calculate each one separately. We'll start with income from continuing operations was $350,000. We're going to divide that by the number of shares outstanding. Looks like that's 100,000. That gives us $3.50 earnings per share on income from continuing operations. Okay, then we'll calculate earnings per share on this loss on discontinued operations of $318,000. So that's a negative $318,000 divided by the $100,000. Gives us a negative $3.18. And then we'll calculate, we could actually just take the difference in those two, which is going to be 32 cents positive earnings per share company-wide. Well, let's calculate it to make sure. We'll take our net income of $32,000 divided by 100,000 shares, and that gives us 32 cents, which is also the difference in these two. We want this breakdown of earnings per share because if we only show earnings per share of 32 cents, it looks like we didn't have that great of a year. But if you see it this way, earnings per share on income from continuing operations was $3.50. Our loss on discontinued operations, $3.18. Well, next year we're not going to have this again. So this points to earnings per share being quite a bit higher next year. Okay, so I hope you understand, any gains or losses on discontinuing a segment of the business should not be included in income from continuing operations. It's shown below that number, also below income tax expense. So this item is shown net of the income tax effect. It is a part of net income, but it's not a part of income from continuing operations. Then we have to show our earnings per share breakdown separately. Earnings per share on income from continuing operations, on the loss on discontinued operations, and then on total net income. Okay, you guys try that one with me on paper, and then I think you should be ready for your next homework assignment. That's exercise 4-6 on the Connect site. Thanks.